About what PIP is, how to calculate PIP in trading. This is a term you would hear a lot of time, or one of the first things you will hear when you begin trading or looking into the market, because PIP is what I would refer to as a measure of change in value. So what are we trading? We are trading because we expect change in the value of one currency to another, and this is what prompts us into taking a trade, whether to do a buy or not. So what do you use in measuring? It is the unit of measurement. That's what a PIP is, all right? The unit of measurement to express the change in value between two currencies. That is a PIP. So next time you get asked what a PIP is, I hope you get to understand how to answer that. So on the screen, I have a pictorial illustration of Euro USD, and say that this currency pair, the value was trading for 1.1498 and it moved to 1.1499. What happens? This currency pair has increased in value by 1 pip. All right. So 1 pip movement is what we have. Now you may be wondering, how about this last one? Why are we not talking about it? Well, the pip in the 5 decimal places pair, all right, when a currency pair is quoted in 5 decimal places, the 4th decimal place is the pip. So if Euro USD moves from this value to this value, which is 1 pip, that is 0.0001 USD rise in value, which is also known as 1 pip. All right. So it is the 4th decimal place that we are looking at as the PIP value. This last one is called the pipette, and we would see it now. Now look at this. So if this, we have this quotation for our currency pair. This last one, which is 4 here, is the pipette. The 5 is the PIP. All right. So you start calculating from here. If this one doesn't move, even if it moves a bit, it could also have effect on this, because if this one moves to, say, this one moves to 6 and this one moves to 6 as well, that is no longer just 1 pip move, it is 1.2 pip movement. All right. So this is pipette, this is pip. Now let's better understand it by looking at pip map. All right. So look at this. What do we have here? The last value is the pipette, as we said, and it could also be called like a fractional pip. So in this case, this is 0.2 pip. This one is 8 pip. This is 3 pip. So it's like saying we have units, tens, 100, 1,000, and tens of thousands. If you still remember your mathematics in school. So this, from this unit value is where we start calculating PIP from. So if this exchange rate, if the exchange rate increases by 100 PIP, what are you going to see? It is from here you will see the difference. So this is going to change to 600, and this will be 1.16382. All right. So that means that we now have 100 pip movement. Let's say there's an increase of 50 pips. Where is that going to change from? From the tens. So 50 plus this is going to change to 8. 5 plus this is going to change to 8. 0 plus this is still 8. So we have 58, and it becomes 1.1558. All right. I hope that is clear. If this changes to 2.1, what has happened? We have 10,000 pip movement. If we have 1,000 pip movement, where is it going to change? Here. So we're going to have 1.25382. All right. Now let's assume that we are trading a currency pair that is, say, 3 decimal places. All right. Like any currency pair that has yen, like USD yen, GBP yen, Euro yen, it's going to be quoted in 3 decimal places. And what do I mean by that? So you can see something like this: 126.321. So what does this mean? The pipette is 1, or we have 0.1 pip, we have 2 pip, we have 30 pip. All right. So here, this is where you start calculating the pip from, the 2nd decimal place, where you have your currency pair quoted in 3 decimal places, it's going to be here. There are some that are quoted in 2 decimal places. You just know that the last one is a pipette, and the first one, the second to the last, is a PIP. There are some also that don't really use pipette. It all depends. Like it all depends on the broker as well. Like for crude oils, for instance, it's just the last currency here that I start calculating as a PIP. But it all depends on how the broker puts it for you. All right. So yes, this is how the PIP move, the PIP movement that you see, this is what it all means. So let's say that you're taking a trade and you enter at this value, all right? And now say, okay, we want to do a buy in euro yen. Sorry, let's say euro USD, because we are first looking at this 5 decimal places. And I say, our take profit is going to be 82 pips, or let's say 83 pips, all right? Our take profit is 83 pips away. Our SL, our stop loss, is 40 pips. So now, what is this going to change to? And let's say we are doing a buy. In a buy, you expect the price to increase, right? So we are going to add 83 to this. What does this become? So we have our 2 still. We have 3 plus 8, we have 11. So we take 1 and add it to this, becomes 9. 9 plus 3, we have 12. So this becomes 2. And this goes to 6. So we have 1.16212. That's the place at which you're going to take your profit. What is your stop loss going to be? Your stop loss is going to be 40 minus this. So let me erase this one. Okay. Stop loss is 40 minus this. So this one minus 40. And what do we have? This is still 2. 0 from here. We have still the 8 is still there. Now 4 minus this is smaller. So we're going to borrow 1 from here. I hope you understand the mathematics I'm doing. So we have 9 here. And we have 4 left here. So we have 1.14982, and that is what our stop loss is going to be. I hope this is clear to you. That's a simple way to calculate your PIP value. And so not PIP value in this case, just your PIP, the PIP. We've talked about PIP value if you look at lot size and all of that I've talked about earlier. All right, thank you. See you in the next class.